Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Sunday, July 14th, 2024. Hope you guys are having a fantastic weekend, and let's get started. So, this is pretty much a bipolar market right now. We're seeing all in and all out, meaning that we sat there, we made this made the high right there, and then from there it was all selling, and we went from the 56.40 all the way down to the 55.73. So about a 70-point drop, and that was in 4 hours, and then 4 hours later we were back at new highs. So it's not really normal. You don't really see these moves like this, but in any case, the pattern that I'm following, it looks like it's this bearish rising wedge. Again, it may fix itself before it plays out, but if this does play out, this is looking for a move to come somewhere right around that 5,500 level. So that would make sense, and it's kind of what I'm expecting. I personally think that we may be able to go lower than that, and really the main reason is the daily chart from just a wave perspective that we have the clear 5 waves, 1, 2, 3, 4, 5. We have bearish divergences. So if we're just going to use this as our, say, parameters on it, sorry, hang on one second. Okay, so if we're just going to use this as our parameters and say, okay, well, if they're just going to do some type of retracement as we get into this into the period that I'm anticipating that we're going to see some backing and filling, if it just goes to a 23% retracement, now that's from here up to here, we're talking about a move coming down to 51.46. So it's something that you really want to, I mean, I don't think a lot of people are really expecting any kind of big move. Most people are just bullish. They're saying, okay, we may get a 2% correction or something to that extent, but there's just no fear in this market. Now, I don't know if, what happened over the weekend with Trump almost being assassinated, if that's going to stir things up. Maybe reality kicks in. I hope not. But in any case, we're at a phase of this rally that, I'm anticipating that we are going to get, I think it's going to be closer to a 10% retracement, not just a 5%. So I'm looking at 51.46, and I wouldn't be ruling out this a move down to the 4,900 level. So we have to just wait for really the S&P to break through. This is going to be the important first support level, and that's going to be the 55.76, and then we're going to come down to that 5,500. If they can get through the 5,500, you can see we have some support right here at the 55.20, and then more support really at this if we come down to the 54.45, and we have this open gap as well here. So we're setting up for it. As I've been mentioning, some of my timing models are looking for the decline to start sometime this week, so that would be looking for some type of top, but maybe we made the top on Friday and we're going to start down. We have to just kind of play it by ear and see what the markets are telling us, but it's very, very overextended. We have the sell signals. Now, the one thing that I want to show you is if we take a look, this is the NIAD here, and it fixed itself. And the reason for this is, when it was coming down like this, what was happening? You just had really the 7 stocks. You had NVIDIA, Apple, Google, Amazon, Meta, Microsoft, that were really, it was 7 stocks that were lifting the entire market, and everything else was moving lower. And we can tell that mainly from the Russell 2000, because the Russell 2000 has been stuck in the mud and then got, juiced up on Thursday because of the CPI numbers, and everybody rotated out of these big tech names and they were going into the small caps. And that was the weird day on Thursday when you had the S&P down almost 1%, but yet we had IWM that was up almost 4%. So to me, I don't really like when the markets are like that, because it's hard to get a handle on who's going to win this battle, meaning that when you see the Dow up 300 and the S&P down 60, it doesn't seem like it's going to stay the same. It's either one side's going to pull the other one up, or the other one, or the S&P is going to pull the Dow down. So it's hard to trade those. To me, my mind, I don't really enjoy doing that because I just feel like I'm being set up on whatever side I take. So we were able, on Friday we had the PPI numbers that came. And they actually came in hotter than expected, but yet here we had this rally here, and we made it right up to these highs and then pulled back. And once we found some support right here, we shot back up, but that also set up bearish divergences. And once we got up to this level, we just got all out selling towards the end of the day, and we retraced really, we came all the way down to the 5,600, which is the call wall, and then we found a couple buyers. So the bulls won the overall day. But this would be a little bit concerning as far as if I was a bull, that, what was the reasoning for this sell-off right here? Because we went from 50, basically is another 50-point drop almost. So we had a 70-point drop here. From that, we had a 90-point rally and then a 50-point drop. So the credit spreads, they would not work as far as the iron condor. And, we did get stopped out on one of them, but then we were able to take a debit spread right here. And really the main reason for that was that the AI for the options had a 98% chance that the market was heading down compared to 2% chance of it heading higher. So I threw out the, you could take a debit spread right here, and we collected like $5,000 in a matter of it was like 30 minutes or something like that. So it was a really easy trade. But the first one wasn't, where we got stopped out, because I was on the impression that we were going to kind of slow down right here, maybe make a smaller top. And, when I put the credit spread on the top part, we just got stopped out. So it was a risky trade, but it wasn't one of the riskless trades that we could put on where we put the iron condors. But the iron condor, we would have been stopped out, and possibly on both sides because of the move that we had. So we were able to skate around it and make some pretty decent profits. And right now we have to just kind of see how this plays out. If the bears can push through the 5,600, then we're going to come back down and we're going to test the 5,578 level. If they get through that, that's where I'm looking at a move coming down to the 5,525. But that means we're going to be through the important volatility trigger, and from that is where we start looking into the 5,500 and then possibly 5,400. For the bulls, this is the crazy part, is that they're going to have to get it above this. This was support right here, and they blew right through it. So now it's going to move back to resistance, and you can see kind of right here where we have this top here. It topped right here and it came down, and we busted through it. So this is now going to be resistance, and that's going to be at the 5,637. If the bulls get it above that, then there's a chance we're heading up to 5,700. If the bears win, we're going to come down. We're probably going to test this 5,575. Again, if they take it out, then we're starting to look at the 5,526. But more likely, this is going to be really the volatility trigger, the 5,550. Below that, you anticipate that we're coming down to the 5,500. So let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.